Over the last 15 years, working at one of the top wealth management firms in the entire country, we have realized that there are three types of people when it comes to how we're making decisions with our finances. The question is, which one are you? The first type of person is something called a do-it-yourselfer. This is literally a type of person that likes to do everything themselves. This is the person that consolidates all of their investment accounts at one potential custodian. They do the consistent monitoring of all of their accounts. They also do the research on the best form of distribution that they should be taking. They also do extensive research on wealth management and how to optimize the growth of their wealth for the purpose of living a dream retirement, minimizing taxes, protecting their assets against potential risks like lawsuits, and then also structuring the legacy that they will leave behind by doing their own estate planning. You see, the benefit of being a do-it-yourselfer is that you don't have to pay for any of the professional services like investment management or tax strategies or maybe even attorneys. You see, the drawback of this approach is that because you're not potentially an expert in this field, there might be many areas that you might drop the ball on because of not having the extensive level of knowledge and the know-how to implement these exact strategies. You see, most people in this situation, they like to learn a lot, but they tend to implement very little because it is all dependent on their implementation. You see, the second type of person is someone that is just looking for an investment advisor. It's someone who they are looking to help give them guidance on just specifically how to invest their money. Maybe giving them some stock tips or maybe some mutual funds that they should be investing into based on their risk tolerance and maybe potentially their age. We see normally these types of investment advisors, they're going to charge anywhere between 0.5% to about 1.25% of whatever they're managing for you on a yearly basis. This means that if you hand them $100,000 for them to manage, then they're potentially going to be charging you anywhere between $500 to about $1,250 per year for the investment monitoring of your account. Now you get into the final type of individual, which is someone who is looking for a holistic financial planning firm. This is an individual who is looking to work with a full-service financial planning firm that will assist them in building out a retirement income plan so that they know exactly how much they need to save every single month so that they eventually get to the point that their wealth in itself can sustain them throughout their entire retirement. And this is probably going to be 20 to maybe 30 years during your retirement. This is where an actual detailed plan needs to be mapped out to get you from where you are today to where you want to go. You might right now have $100,000 saved up, but you might need $2 or $3 or $4 million for you to eventually retire. The next thing that they're going to be doing is that they're also going to be able to include investment monitoring and management of your entire portfolio while also giving you distribution advice on how to distribute the money from these accounts in the most optimal way so that it reduces the tax impact while simultaneously optimizing the growth of your wealth. You see, this team is also supposed to be guiding you on strategies that can help you implement and reduce your overall tax impact as a family. They're also going to be giving you charitable planning advice on how to reduce taxes when it comes to the charities that you're giving, and also how to implement more advanced tax strategies if you have real estate or probably you own your own business. This team's optimal goal is to help you legally reduce taxes on a yearly basis so you keep more money in your pocket. They're also supposed to assist you with helping you put together strategies that can help you reduce your exposure to potential risks like lawsuits or a big impact that can destroy your wealth. You see, one of the biggest concerns that people have is that they enter now their later stage of life, like retirement, and they're concerned about possibly going through a health event that can wipe out their entire life savings by not doing proper long-term care planning. So all these types of risks, like lawsuits as well, can potentially wipe out our entire wealth that we've worked so hard to build. This is why your funds need to be structured in a way that could potentially protect you against risks just like these. And the last thing that they would do is that they would work with you through building what's called an optimal estate plan for when your wealth transitions to the next generation. We want to make sure that you have your living will, your durable powers of attorneys, healthcare surrogates, and also your trust, and that it's all created to properly transition your wealth to your family when you're not here. In simple words, it's how do we make sure that what we want to happen with our money will happen even if we're not here to see it happen. Normally, a holistic financial planning firm like this will charge you anywhere between 0.75% to as high as maybe 1.75% per year of the assets that they manage for you. So the question is, what type of person are you? Are you a do-it-yourselfer? Are you a person that is just looking for someone to give you investment advice? Or are you a person that's looking for a holistic financial planning firm? Whoever you are, just make sure that you're paying attention to all of these areas when it comes to your money. And just make sure that you have strategies in place to be able to protect you against all these potential events. If you'd like to speak with one of our advisory teams, please reach out. We're here to help. Talk to you soon.